Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monty, and this is a one-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. As you can see, we've left the lines on the chart from last week's report, where last Friday I drew this diagonal line right here, with the end of the line being our target at 346.45, and you can see perfectly how the price was hit yesterday with this shooting star. And not only did we hit our target with that shooting star, but the gap has completely filled, and that's what that horizontal line represents, was the gap fill point. Now that our target is hit, what does that mean for next week? Let's start all over. We'll clear the charts off of the forecast lines now that the targets have been hit, and analyze the technical signals. Again, that shooting star is bearish. We have a candle here that looks very much like a hanging man. That is the second most bearish candle, tied in second place with that shooting star. And being that that gap has filled, that gap is going to act as a resistance point, because if you're following along with my gap fill strategies, you'll know that 80% of the time gaps fill. And then after the gaps fill, there's an 80% chance that the price will reverse. Notice down here from Wednesday, there is another open gap below the market. So this is going to be my price target for next week. And in addition to these bearish candles, you can see that we've had a drop in volume on the way up. That's bearish. We have a stochastics oscillator. It's not overbought. However, if you look down from there, we had the CCI go overbought, and as I magnify that, you can see that it crossed down below that red line, which is now a sell signal. So as I draw my lines out this way, we're renaming these from speed lines to zip lines. Thank you, Bruce Marshall, for making that suggestion. We took a vote from our members. Our members like the term zip line much better, and I think that really cuts some of the confusion out, because there are speed lines out there. They're resistant speed lines, and they're very different than what I'm drawing here in our new zip line. Same concept though, end of the line being our target at 344.05. Again, I make those forecasts to the penny for those option traders out there. If you need a timeline on that, look at the bottom right-hand corner of that box. It's October 18th. So for those of you trading the short-term options, it'll give you an idea of which option expiration to buy into. So that is the diamonds. Now let's hop right to the Qs. QQQ is the ticker symbol. It's a NASDAQ ETF, basically. Once again, you can see my forecast was that we would move up to the moving average, and you can see not only did we move up to this moving average, but now the moving average is acting as resistance. See that? Today's red candle completely engulfs yesterday's sliver of a green candle, and that is a bearish engulfing candle. That is the most bearish candle you're going to find. And there is still a slight gap below the market that could draw the prices lower. Yesterday on the shooting star, we did have a drop in volume, which signals that the buyers are running out of momentum. Look what's happening to the oscillators. They're starting to hinge more toward the sideways direction, especially the CCI turning back below that zero line or that momentum line. So again, erasing all of our lines from last week's forecast, I'm going to draw this new zip line down here. I think we're going to test this low with that downside price target on the Qs at 355.22. Taking a look at the monthly chart on the Qs, you'll see how the tech sector is really starting to roll over. Last month we had a pretty pronounced bearish engulfing candle on the monthly, and look at the oscillators for this October month right here. See, we have a sell signal already occurring. The stochastics already has a sell signal. All that momentum is heading lower, and that basically supports our idea for shorter term downward targets, and that is the Qs. Now let's hop to the spiders. Ticker symbol SPY. Once again, hit the targets like a champ. Look at that. The target from last week. Remember, none of these candles were here. This was just a blank canvas where we drew this zip line to the upside right there with the target of 440.35. Yesterday, we hit that target. filled the gap, again, precisely to the penny. See, 80% of the time that's going to happen. And now that that gap is filled, like the diamonds, we have a resistance area. It's more or less going to act as a ceiling for the short-term price action. And so with that, take a look down below. Not only are we pulling back today with a bearish engulfing candle from that gap fill point, but we have this drop in volume down here, telling us yesterday the buyers ran out of steam. We see a slight increase on this red candle, telling us the sellers are a little bit more motivated than the buyers were. The oscillators are starting to hinge lower, particularly the CCI. And again, with that, I'll erase all the lines now that the targets have been hit, and I'm going to draw this down to this level right here, halfway through the range from Wednesday's price action. Downside price target on SPY is 431.85. Keep your eyes on that, and you might want to set a price alert for when that hits so that you know that we are reaching a level of support, which is down here. I continue to believe that the markets are going much lower long term, so we're seeing more of the swing traders selling into the rallies than we are seeing investors buying on the dips. And that is a significant shift in the supply and demand of how we're seeing this market. So again, keep an eye on that, you traders, and make sure you're keeping a good risk management plan in place so that you don't get caught off guard. Now, this brings me to the VIX, ticker symbol VIX. In the past month and a half, 2 months, I've put out 3 guarantees, and all of those guarantees passed with flying colors, where I said, back here, let me draw this out. I'm going to take a little bit more time on the VIX. Right here, this gap filled precisely, and I gave a guarantee that the VIX would rally from that point, and it did. Then we had another opportunity where the VIX gap down below filled, and I gave another guarantee that the VIX would rally, and our members made money on that, good money. I also made a guarantee that this gap would fill to the downside. It did. And now look what we have here. Last week I said that the VIX would most likely come down to fill this gap, which it did, hence the reason why I put that horizontal line right there. And I'm about to make another guarantee. I guarantee you that the VIX is going to rally from this point and fill this gap here, right? Because now this gap is filled. With the VIX, it's different than equities because 100% of the time on the VIX, gaps fill, and after they fill, there's a 100% chance, based on historic price action, that those gaps above the market will fill. So I'm making my forecast line right up to the gap fill and maybe a little bit beyond. So this is my guarantee for the record that we will see the VIX at a target price of 21.30. It's currently closed at 18.77. So for you traders out there, that could be a good percentage of return if you're playing it, especially in the options. Notice down below, the CCI is starting to hinge. There is a key support level down here. Let me erase this and redraw the support level for you so you know where you would manage risk. Even if we go a little bit lower, this gap on the upside is going to fill. That's the bottom line guarantee. And so this support level down here is right around 1757. Again, to reiterate, my price target on the VIX to the upside is 2130. Now, finally, I have been periodically commenting on Ethereum, ticker symbol ETHE. And once again, look at that. Targets were hit. Last week, I drew that zip line to the upside with the end of the line being at 34.79 for Ethereum. And look at that. Not only did it hit that target, but it's now stalling and turning back from that target point with a gap below the market right there. So what do I think we could see here in Ethereum? I think we're going to see lower prices. Ultimately, I think that gap is going to fill, but I'm being conservative on the downside target of 30.77. I personally have a plan on buying in this general area. I do have a limit order in Ethereum. Right now, I'm dabbling in the crypto market. I'm not an investor. I'm a trader. And I like that gap because if you decide to buy anywhere in this area, you have a good place to manage risk. Because if your buy area is here, you could put a stop somewhere below that support level, and knowing that the gap fill level is also going to act as a support level. So you got a good opportunity there. Again, manage risk. The Ethereum market, crypto market, the Bitcoin market, extremely volatile. I know there's a lot of folks out there that are more or less investors. I like the volatility. I like trading it. And again, I may not comment on this absolutely every week, week after week, but I like to check in on the Ethereum market for those crypto traders out there that find value in this report. If you'd like to learn more about what we do at Market Rebellion, just click on the links in the description box. You could speak with one of our representatives about some of the other services. We have an Oracle Hour on Wednesday where I go through a rapid fire analysis. Let me just give you one example. This is a stock that came to us through one of our members named Nancy, where we were looking at this, and look at that. We did the forecast just like we do the markets. And yesterday, this stock right here hit the target precisely to the penny. And we did 29 other stocks just like this. And when these stocks that come to me through the audience, when they look really good based on the technicals, I label them as star favorites, which makes them high probability trades for those that are looking to trade them. So Wednesday night is just action packed. It's a very inexpensive service week to week. Most people make their money back almost in the first week, and they keep it cheap at Market Rebellion, but they also provide a lot of value. So that's my plug for that service for this week. I don't normally do that, but I find that a lot of people are raving about it, and I just want to share that with the rest of our folks. So have a good rest of the weekend. We'll talk to you soon. So long.